Hi, thank you for joining me for my post-Christmas update on the demo account I've been running for the last 3.5 months in preparation for the portfolio I'll be using on my own live funds as of next week. So I was collecting data there from basically the end of September to about mid-December, looking to answer a few questions from data on the demo stage, so I don't include my biases. And over the Christmas period, I've had a chance to analyse that data and look at answering those questions. And the main questions I had was around where I'd be looking to set my equity protector and how often I would then be back testing the optimization files to be able to keep it as in line with the market as possible. So first of all, just a top line from the whole portfolio. I broke it down into two phases when I was doing my calculations. Phase one was after the optimization, which ran up until about mid-October, and then the second one was from after the reoptimization from mid-October up to then mid-December. So 6 weeks in the first, 8 weeks in the second. And what I found is that in phase one, from the 29th of August all the way through then to mid-October, I got $42,000 then, and also with a 23% drawdown, which was happened here. In phase two, taking into account that I did cut it off when it reached about 30% in drawdown here. I cut it off so the balance then restarted. Before then, I got the best part of about nearly $6,000, and afterwards it rose then back up, and I got just over $26,000. So in all, I got about $32,000 there with that 30k EP that I had in place there. And if you recall, that was because I said that at the time that my risk tolerance was around about the 30% mark on my own funds in terms of drawdown. For some of you, that might sound too much. Others would have a wider field on that and would go even further. But that's just where my risk tolerance, I feel, naturally sits. But one of the things I did say there when I first started this is that I'm going to be rolling with the data, seeing what the data tells me, and I'll be adjusting then accordingly. And also importantly, I also cut it off. It was running out of margin, and therefore if I was going to stay in that sequence for any kind of long period of time, I wouldn't actually be able to accurately analyze what the other set files in the portfolio were doing, because they wouldn't have any margin to open. So then the data I may have had over the coming couple of weeks there would be skewed, because I wouldn't get a true reflection on the real performance of the other set files if they weren't in the market. So when I looked into the data, first of all, let's look at where I decided to set my EP. So as I said from the start, my natural tolerance probably sat in and around about the 30% that I'd be happy with, and that I've run past funds before myself as well. So I said I would run with the data. So what I found with these two large dips, down to 23%, came back up, but also this ran to my tolerance. I thought, I'm going to cut it off like us for the reasons I just said. In hindsight and looking back at that pair that did that set file, I seen it stayed in that drawdown and actually went a bit further, probably about another 10% further, but it came back out and it would have closed the sequence about 2 or 3 days later, but I weren't to know that at the time. Either way, that's a level that I wouldn't want. So, but when looking at it in terms of calculations and what it would be like, is so if I did have my EP level at my risk appetite. So if that were the case and I'd set my EP level at 30%, well, I would be earning money here and that would carry on up. But then if I did hit my EP, I set it at 30% and it hit here, you can see then from the 21st of October through then nearly about 7 weeks later, I wouldn't yet be all the way back up to where my balance was there previously. So it would take me maybe 8 or 9 weeks for me to come back up to this break-even point, which I'm sure you could agree that's probably a bit too long. So I've decided there on this portfolio that I wouldn't go as far as where my risk tolerance sits. I'm going to go with the data where the data shows me. So what I ended up deciding doing is choosing an EP that was just below the maximum amount, with a bit of wiggle room, the maximum amount of drawdown that I seen within the whole time. So except for these two this dip and also of course this one, the the maximum amount of drawdown that I either, number one, I seen, or number two, that I had measured within my FX books was 4.6%. And it was probably around here, but my FX books recorded it as, I think, 3.6 or 3.8. And as I've stated there previously as well in the previous clips, if you've been watching, that I don't have 100% trust in the accuracy of the drawdown levels on my FX books, because I have seen it to be a lot more than what has been stated then as what's been captured in the data by my FX books. So as I said, the largest I'd seen was 4.6, but that's not to say that it didn't go any further. So in terms of my trading psychology, I wouldn't like to keep it too tight to that in case it hit a number of EPs, and therefore obviously creating maybe potentially a bit of stagnation and growth in my account, because I'm just earning then losing, earning, losing. So what I decided to do is give it a little bit of wiggle room. Now this is not a hard and fast rule in terms of a process. Everyone is individual of where they could set their EP. Someone could read this data in a completely different fashion, how I do. But what I've decided to do is give it a 6k EP. And so what would happen if I had a 6k EP running for the length of this? I would hit an EP here, but I'd hit it quite tight, so it would cut it off. And then I wouldn't hit have hit at the highest amount of drawdown that I witnessed, but I would hit an EP on this one when it went down there beyond 30%, and then I wouldn't have hit an EP for any further along here, because the most drawdown that I experienced, as per what my FX book says, was about, I think it was 3.2% in there. So 6% I feel gives that a nice bit of wiggle room, nice bit of margin for the price action and my sequences to build and to breathe before then closing upon the reverse of the price action. So I did my calculations in terms of what I would get if I had an EP, and how I did those calculations was I took the total sum that I would have earned, and I took the total sum then that I also would have earned from the sequences that got cut off. Now I cut this off, so I can't count that, but I took the profit off that I would have earned here, okay, and I minused it then the amount of EPs I would have had, which was 2, and then what I calculated was in total for all this growth minus the 2 EPs, I would have got, in the space of time from the August 29th through to 13th of December, what was it? 12th of December, I would have got 59k, so that's 15%. So on average, over the 3.5 months, that would have been 17% return, which actually, funnily enough, it's quite nice that it folds in quite well to my backtest data, because in the first phase of my backtest data, it said I would get, in the 6 months of the backtest, it varied from earning 6% a month up to 16% a month. Then in the second phase, it said I would have got in some months from 7% up to 20%. So at 17% return, that's in line with the profit that I've been witnessing in the test results from that 6-month back test with a third walk forward. Which is quite nice. And also I calculated that if I did hit an EP, it would take me about 1.5 weeks to recover from that EP. Now, that's nothing like the space of time here between of 7 weeks for this, which I think everyone would agree would be too long. Now, this is where it becomes again an individual to the trader's trading psychology. For me to recover, take about 1.5 weeks to recover, and thinking about me being in that deficit, that's actually quite okay with me, 1.5 weeks. There might be some traders who might feel that 1.5 weeks is too long and they would want it to be shorter. Well, in that case, they may choose an EP level that would be higher, closer to the price. So, a lower EP, maybe around about 3 or 4%. But then the payoff for that is you're going to more than likely maybe hit more EPs, which then obviously would affect your projection of your earnings. But then other people might think, you know what, I'm okay if it was a bit wider and a bit longer in terms of, instead of 1.5 weeks, maybe 2.5 weeks. They might put it lower than, or increase EP higher to maybe 7% or 8% instead of the 6 I've chosen, to leave it breathe a bit more. the price to breathe a bit more in the sequences. But that, for me, 1.5 weeks feels comfortable in terms of to be able to bounce back after any sort of equity protector. So that's what I'm going to be running for. That's what I'm going to be running. And as I said, that's based on collecting the data there over those 3.5 months. I'm feeling I've really got to know the characteristics of the set files, that the optimization file that I use, what it outputs and the ranges that it gives me. I feel confident on that because I've also done 2 optimizations within my testing period as well, so that I can see what different set files are like from this optimization file, so I can get an idea of the range. And also the next thing that I want you to really identify is how regularly I'm going to re-optimize my set files. So for those of you who do not trade EAs and have never done back testing, we program our EAs based on the past data, and we do acknowledge that past data is not going to be no indication of future performance, but it does give us a decent headwind. So what we do is we take it and we put it on a demo account for a certain period of time to see how that looks if it was playing out for real, to make our decisions. So I'm just wondering then when I would re-optimize to keep it in line with the back-tested data. And what we tend to teach here within POW is that when you're first running your portfolios, you should leave it run for the period of the walk forward phase. So that was 2 months, because it's a 6-month back test with a 3rd walk forward. And if you recall, if you've been watching the previous clips, I re-optimized a little bit early, simply because I was going to be away for a long weekend on the date that I should have re-optimized. So I end up re-optimizing at the 6-week phase, but then on the last phase, I let it run all the way there for the full 2 months. So what the data is telling me is that despite these 2 big hits, it stays relatively in line. I've had really low drawdown levels, and I'll be honest with you, I knew that I was going to run with the data, but I had in the back of my mind, I thought if this is going to be quite hairy in terms of the way the equity loops like this and goes into drawdown more often than we see here, I was in my head quite prepared to re-optimize this on a weekly basis or every 2 weeks or so. And the main indicator for me for that would have been how long it took for the drawdown to go out of line with the back test data. And in phase 1, it took 14 days for it to leave the general range of the drawdown that I witnessed in the back test, which was around about 4.5% for both phases. So it was 14 days for the first, and then it was 7 days there. You see there, because I re-optimized. I sent it live on the 14th, and it started jumping then on the 18th. So within 7 days then on the second. So looking at that I could look at that and think, right, well in that case I've got to re-optimize every week, and I can see how another trader would think like that. But I'm going to decide to do something different, and simply because that apart from these 2 big dips, and again the caveat is everyone's going to read this data really differently. If we said to trader A, B, C and D and said, hey, you've been looking at this for the last 3.5 months, decide what you're going to do now if you're putting it live, we'd all probably come up with different data. So there is no right or wrong, it's just what works, number 1, what's profitable, but also 2, what works psychologically for the trader. So just bear that in mind. You may have a differing opinion to me and you think, oh, I wouldn't play it like that, or maybe do it a bit different. But I'll explain to you what my thinking is behind my decisions here. So what I've decided to do is not backtest it, re-optimize it after every week or every 2 weeks, which is when it actually went out in line with the data. I'm actually going to leave it go for longer. I'm going to leave it go for 6 weeks. And the reason being is what I just alluded to just a minute ago, is that the equity and the balance is staying really in line, it's staying really tight. It doesn't really go into too much drawdown, even when it is 6 weeks out from the from when I back tested it. And this one went for 3 months. Well, went for 2 months. So if we grab it from say the 24th of October for the second phase, 24th. So second phase, what after this drawdown was? Is it 24th or Yeah, so you can see here, I only had 3.6%. I let it run for 2 months. So even in the latter stages, it was still doing really, really well and not providing me much trouble with drawdown. So like I said, I would probably look to re-optimize a lot sooner, every seven days or 2 weeks, if I thought, gosh, I'm going to be hitting a lot of EPs here if I have it at 6k level. But the equity line isn't looping up and down on a regular basis. It is staying quite tight, which is showing me that if I look after the account so that as and when it goes in excess of EP of 6k, it's showing me that if it goes in excess of 4.5 to 5k, it's really going to go for it, and it's going to go down maybe quite a lot. So it shows me that it's going to be an extraordinary event. So if I look after those extraordinary events, and set an EP that I'm happy with psychologically, which is 6k, then I'll cut that off so it won't go AWOL on me and produce dips such as this or down to here. And for the rest of the time, my data tells me that the set files from this optimization file, because I re-optimized it halfway through, that the set files will operate within a range of beneath 6k and provide me with the profit I've got. But if it goes beyond that, it's really going to go beyond that, so I should cut it off there. But it won't do it often. I feel comfortable just doing it at 6 weeks. I could say, yeah, well, I'll go for 2 months, because I've got the data to say that it will last for 2 months. But I didn't run it for 2 months in both of them, but I did reach 6 weeks in both. So I'm quite happy in going with that. That logic makes sense to me. But to caveat that, what I'm also going to do, and I'm adding it into my trading plan, I've got a section of my trading plan called What If, and it's where I do like a pre-mortem of scenarios that if some scenarios happen, what I will do in those instances, and that is to help me with my critical thinking in the moment. I mean, you can't think of all scenarios, but you can certainly think of the scenarios that you've experienced in the past. So what I'm going to be putting into my What If column to help direct me my critical thinking, as I said, is if I start experiencing more EPs than what I would have experienced if I had a 6k EP in the data, which is really only 2 EPs, if I start experiencing more than that, or if it starts to take me longer than about, on average, a week and a half to recover from those EPs, what I will do is I will then revisit the data and look to re-answer that question of, do I need to re-optimize sooner to keep it in line with the data? But for the moment, I'm quite happy with that, and I'm quite happy then with my caveat that if the circumstances change and this isn't, when I put my own money on it, it's not working out the same way as I've had over the last 3 months, I've got a plan B in place and for me to direct my focus towards. So that's everything now. I've funded the account. It's ready to go. But thanks for bearing with me and for joining me on this journey. I wish you the best. Enjoy.